E-mini gapping up again today. Different ways to draw a channel. We have a measured move up, potentially from this gap around 2760. I don't know if we'll get there. In fact, I do not think we will. Looks like a spike pullback channel, and on the 60-minute chart, and very part of the 60-minute chart, very tight channel that has gone on for a lot of days, and therefore parabolic wedge. We had a parabolic wedge here, and we get another leg up. Usually when you have a parabolic wedge top and you get another leg up, you soon start to pull back. So I don't think we're going to get to the measured move target without first pulling back. Near the top of a 60-minute channel. This is the all-time high now, or it was. Now, yesterday we had a big bear bar on the open. We got an opening reversal up. 2 days ago, two big bear bars on the open. We got an opening reversal up. First couple of days in the rally, we had early bull days, bull bars, and the past 2 days we've been getting early bear bars. And therefore, you should read that as a sign of building selling pressure. And that means that if we get it again today, rather than a reversal up, the odds of a trend down start to go up. This is the same trend line that I have drawn on the 60-minute chart. And you can see we're above it on the 5-minute chart. And I don't know if we're just about to it on the 60-minute chart. The trend lines are usually not the same because the 5-minute chart can be based upon any bar within the hour, and the 60-minute chart is based upon the highest bar of every 12 bars. So the 5-minute chart often uses different bars for the trend line than the 60-minute chart. For example, I'm using this bar, and that's bar 78, and the 60-minute chart might be using some other bar. And same with here, I'm using this bar, which is about bar 15 or so, and the 60-minute chart might be using bar 12 over here, which would result in a steeper trend line. Strong trend from the open bull trend. This is so far the start of a 6th consecutive bull trend day. We're always in long. We never went always in short yesterday. But I am flat. First of all, I'm talking, and then second, I'm cautious about buying in a buy climax. Weekly chart, last week, biggest bar. It's really not all that big relative to the other bars, but it's the biggest bar in about 50 bars, and that increases the chances that it is an exhaustion gap bar. Right now, the gap is this week's low and this breakout point. And sometimes when you get a medium-sized exhaustion bar, you have to get consecutive exhaustion bars to have a blow-off top. And that's what the bulls are deciding. Is last week the blow-off top, and do we start reversing by the end of this week? Or is this week going to be another big bull bar? So we have consecutive big bull bars. That would be, I think, a higher probability bet that this is a blow-off top. which would lead to at least 10 bars down on the weekly chart. 10 bars down is 2 to 3 months. Big bull bar, in fact, bigger than any bull bar yesterday. So an exhaustion potential here on the 5-minute chart as well. Look at bar 2. It opened above the close of bar 1. That means a lot of bulls bought it, but it might be a bull trap. Sometimes you'll open above the high of the prior bar and then get a big bear trend bar, because what happens is, I believe, two things happen. First of all, you got the buy the close bulls who buy as soon as they see one close, and you get a gap up because too many bulls buying at the market. The market has to go up a little bit to find sellers. And second, I suspect that some bear firms buy the close of bar 1, trying to create the gap up, hoping to entice a lot of bulls into buying, and then they immediately sell, trying to get the reversal down. Remember, the past 2 days we've had early bear bars, and I think that increases the chances of a reversal down. Will bears sell below 2? If it closes on its low, even if it's not particularly big, it's a reasonable candidate for the high of the day. Not a high probability sell, but a reasonable sell. The risk is not big, the reward is big. The bears selling are looking for a test of yesterday's close and a measured move down based upon the height of this rally, which would take us down to yesterday's high, yesterday's close. So the reward for the bears is big relative to the risk. They sell below 2, stop above 2, so they risk a couple points to make 7 points, 6 points, 7 points, 8 points. So even though the probability would be low, maybe it'd be 30% if 2 closes on the low, it's a reasonable sell setup. If it has a 2-tick tail, most bears will not sell below 2. They need the bar to be pretty much perfect. I'm going to turn the screen off for a moment and open up that examples folder. Okay, strong rally up, a little bear bar, led to a swing down. 2 big bull bars, bear bar, swing down. 4 bars up, bear bar, swing down. Pair of bear dojis, but still led to a swing down. Anyway, this is the kind of thing that you have to be ready for if it closes on its low. Higher probability, you wait to see if you get 2 or 3 consecutive bear bars. The market is waiting to see how that bar closes. Is it going to close on its low? Okay, I had my finger on the button. I was going to short below 2 if it closed on its low, but it did not. So it's still always in long. If you're a bull, are you looking to buy above 2, a high 1 bull flag? Probably not. This is confusion. It's still a possible high of the day. It's still one's still a possible low of the day, but I don't think it's going to remain the low of the day. Bad follow through on bar 2. Some bears will still sell below 2 despite the tail. Because of the tail, I usually wait to see if we get a second consecutive big bear bar closing on its low, or 3 smaller bear bars. here we get 3 bear bars, one of them big bear bar closing on its low. I'm not talking about buying up here. We have a trading range late in a bull trend, so possibly a final bull flag. We're at the top of a channel and a very tight channel, so parabolic wedge, so you can call it a spike channel, 60-minute chart. And terrible follow through. One did not close on its high, had a 2-tick tail, and then 2, a bear bar. That's the sell signal. The math is okay for the sell, but because of that 2-tick tail on the bottom of 1, the probability is not as high as it could be. So it might be one of the situations like this where it takes 2 or 3 bars before traders believe the bears have won. You want to see at least one decent-sized bear bar closing near its low. And at that point, you think that the bears have taken control. It's still a high 1 bull flag above 3 or above 4. But the 2 bear bars, I think, reduce the chances of this being a big bull trend day. If we do get a rally over the first hour, it probably will not last more than an hour, maybe 2 hours. And then either the market would enter a trading range or the bears would get a reversal. So I'm thinking that today's going to have a swing down. We have not had a swing down anywhere. We've had trading ranges lasting a couple of hours. Is this a swing down? I don't know. It's only about an hour, not very much. Same with here. So for 6 days, we've been up with very little selling. Selling rarely lasted more than an hour. Because we're starting to get trading ranges, the rally is not as strong as it was. And that increases the chances that instead of simply going sideways for a couple of hours, we'll go down for a couple of hours. And I think we will go down for a couple of hours today. It's possible we could go down all day. I doubt it. But I think we will have a swing down lasting at least 2 or 3 hours. If it comes on the open, it's probably not going to be a relentless bear trend day. We'll probably get a reversal up. The market's up so strongly on the daily chart, it's unlikely that we're just going to go straight down today. You can see here we sold off for a couple hours, but we got a reversal. If we do get a trend down for a couple of hours, I think we will get some kind of a reversal. Here, sold off for a few hours, bounced. Sold off for a few hours, bounced. So I think the odds of a relentless bear trend are not very big right now. However, I do think we're going to get a 2 to 3 hour swing down. We do not yet have a high probability top. What would be good for the bears is to get one more new high and then a second reversal with a good looking sell signal bar. So you get a second entry short like this. First entry failed and then a second entry. You have a better chance of a swing down. First entry failed, you get a second entry here. The bear's going to swing down. First entry failed, second entry here, but not a bear bar. Here's where we have a bear bar and swing down. First entry, you get a second entry, resulted in a trading range. I think we're going to get a swing down today. First entry, second entry, swing down. So right now, I would say maybe 40% chance we've seen the high of the day. Okay, now we've traded below a decent bear bar. We fell below the 3 low. So I would say 40% chance this is the start of a swing down. New low of the day. Traders are selling at the market at support, yesterday's high, moving average. Trading range late in the bull trend often is a final bull flag and therefore a magnet. The bulls got reversals up from around the moving average the past 2 days, here, and they're hoping that this is an early low of the day. I think we're always in short, and I think if we do bounce, traders will sell the rally. The bears would like a strong bear trend day, so they would like consecutive big bear bars closing on their lows. But we might bounce here because the past 2 days we had bear bars that bounced around the moving average. Right now, I think 70% chance we've seen the high of the day, even though it's only bar 5. Bulls would like 5 to close above the low of 1. If they get it, then I'll take back my 70% comment. All right, I got to take back my 70% comment if it closes up here. You have limit order bulls who bought the 1 low, and for them to make money, they buy more lower, like moving average. For them to make money, it has to get 1 tick back above the 1 low. It looks like we probably will. The bears should not have allowed this big of a reversal. Are we always in short? Well, I'm less certain right now. I think we probably are. But this is bad for the bear case. It increases the chances of a sideways open. Big up, big down, and now big up again. So I think always in short, probably high of the day, but not 70%, more like 60%. Very important information here. Will the limit order bulls make money? They bought the 1 low, they bought more 1 or 2 points lower, or at the moving average for yesterday's high. They needed to get back above the 1 low. And if they do, that increases the chances of a trading range open. If they do not, it increases the chances of a swing down. So far, that gap is still open. That's important. It increases the chances that we've begun a swing down. Only 1 bull bar in the first 6 bars. A lot of tails. The bears are lacking consecutive big bear bars closing on their lows, but I still think we're always in short, and I think bears will sell a rally if they get a rally. Bulls still hoping for an opening reversal up. Wedge bull flag. Gap up, tried to reverse, third time successful. Strong sell-off to around the moving average, reversal up. Huge wedge lasting 3 hours, reversal up. Same thing here. Big sell-off for the first hour and a half, reversal up. I think if we do reverse up, the day will not be a bull trend day. I think the best the bulls will get is probably a trading range. Looks like a lot of the bears are scalping. You can see the big tails. So instead of bears selling at the closes of bars, they're buying before the closes of the bars because they're not confident the bars will close on their lows. The bulls saw we sold off strongly here, low of the day. Sold off here and here, low of the day. And they're hoping that this is going to be the same thing. This is the most selling pressure of the 3 days. The prior 2 rallied for the remainder of the day. I do not think this is going to be a bull trend day. I think it's either going to be, I think it's probably going to be mostly a trading range day, and I think we still might be in a swing down, but it looks like the limit order bulls below 1 are going to make money, so it looks like we're going above that 1 low. If we do not, that would increase the chances of a swing down. Only one bull bar in the first 7 bars. That's not much buying pressure. It reduces the chances that we can get a bull trend. So that means today's probably going to be either mostly a trading range day or a weak bear trend. The bears are not getting consecutive big bear bars. If today is a bear trend, it's probably not going to be a strong bear trend. We may get stuck back down in here, so we may go down here and then simply go sideways. I think it looks like we're going to get above that 1 low. The bears are failing to drive it down, so the bulls so far have been stopping the bears. Some bears might buy back their shorts 1 tick above 1, thinking that they wanted the gap to stay open, and if the gap closes, then their premise of a strong bear trend day is no longer valid. We're spending a lot of time getting pulled back toward that 1 low. It increases the chances that we get there. However, if we do not get there, it increases the chances that this will be a big bear trend day if they keep that gap open. Close the gap, right? That's bad for the bears. Are we still always in short? I think it depends on what 9 looks like. If it closes on its high, then we're probably back to always in long. If it does not close at or near its high, then we're probably still always in short. But it's bad that the limit order, it's bad for the bears that the bulls made money buying below 1, despite that huge sell-off on 5. To me, this looks confusing. Gap up, sell-off, rally, rally. And therefore, it's probably going to be another trading range open like yesterday and the day before. Still always in short, but not a good sell signal mark for the bears. What are the chances that 2 remains the high of the day? Right now, I would say better than 50-50. But if we get a 3rd bull bar, even if it's a bad one, then the odds start to go down. Gap up, 10 open above 9 close. So as soon as the bulls saw a bull body, even a 1-tick bull body, a lot of bulls hit by the market. So that's a sign of buying pressure. Back to always in the long. It looks like most of the bears scalped out. I am back to flat. I sold, scalped, and I did not buy this reversal up. I thought about buying the 8 above the 8 high or on the 9 close, and I did not. Because of the top of the channel, the location is not good for the bulls, but we have this gap and a measured move up there around 2760, and not that far above. We might get there. We might get there today. Another gap up, 11 open above 10 close. The bears want a double top with 2, and they want this to be a bull leg in their trading range. The bulls want to get the breakout above 2 and then a measured move up. Aggressive bear scalpers are selling with limit orders 1 tick below the 2 high, with maybe a stop 2 or 3 ticks above. But I think we're back to always in the long. Therefore, it's easier to make money buying at the market or buying pullbacks. But I still think today is not going to be a bull trend day. I think, as I said earlier, that it would probably have a lot of trading range trading or possibly a bear trend day. The reversal up on 10, I think, makes a bear trend day unlikely. We've gapped up, so big up, big down, big up. I think mostly trading range day today is likely. For the bears, double top, but I think we went always in long on 10, and 11 is not a good sell signal bar. So low probability sell. Because it's a trading range, any bull buying the 11 low needs a stop down here, and he probably has to be willing to scale in lower. This is the end of the first hour, and at the moment it's a reversal bar. There's still time left in the bar, so it's possible it could close back around the open of the bar and be a doji bar. But the bulls have already done what they needed to do. They got their reversal. It's still possible that 2 remains the high of the day, and we get a double top here. But 10 is a big enough bull bar. It totally reversed 5. That makes the odds in favor of an early trading range instead of a bear trend. So probably buyers 11 low, 1 point lower, 2 points lower. And if we get a reversal, it probably will be part of a trading range and not the start of a bear trend. Like this, reversed down, but stayed above that low. Reverse down, higher low, reverse down, higher low. Can you sell with a limit order above 12? Trading range likely, bad buy signal bar. The math is probably okay, but we got a reversal up bar 10, and that increases the chances that we could get a measured move up based upon this attempt at a double top. Also, we know there's a target above based upon this big gap. So makes me, I did not sell the 12 high, although it might be okay. I just didn't do it. The bulls should not have been allowed to make money on their buy at the 1 low when the bears had such a big bear bar. And then the bulls should not have had reversal, bar 10. Trading range day, likely. But strong enough reversal up, probably buyers somewhere in the middle, maybe around the 10 low, bottom of a buy climax. The buy that closed bulls from bar 10, the market went always in long again on 10, but the bulls who bought that close have not yet made money. If they bought the close, they were filled on the open of 11 and had to go up 5 ticks from there to make a profit. So a lot of those bulls will sell out here and take a small loss and then look to buy a pullback, thinking that we have a double top, slightly higher high double top in possibly a trading range, and we could get a very deep pullback. Stop order bulls, a double top, you can call it a higher high major trend reversal. But, we went up big here, down big here, up big here. I think trading range more likely than a bear trend. Most bulls are not going to buy the 12 high or the 12 low because they see all the reversals, and that's a sign of a trading range. So they'd rather buy 1 or 2 points below 12 or around the 10 low in the moving average. I'm currently flat in the E-mini, and I'm looking to buy, but this is reversing down pretty strongly. On the open, when you get a strong move up or down, 50% chance it's going to reverse no matter how strong. Strong move up, reverse down. Strong move down, reversed up. Strong move up, reverse down. It never looks like it's going to happen. But until you start to get consecutive trend bars one way or the other, any reversal has a 50% chance of, or any strong leg up or down has a 50% chance of reversing. Big down, big up, big down, big up, big down, big up, big down, trading range day. Will we get that today? Who knows? But it's the same kind of thing. Until you start to get consecutive big bars and you break either above the range or below the range, 50% chance, no matter how strong a leg up or down is, it's going to reverse. We're in the buy zone, the bottom of the trading range, back to around yesterday's high. Just like traders sold the 10 close, traders will buy the 14 close, a big bear bar near the bottom. They'll buy it for a scalp. Bears are hoping to get a breakout and a measured move down, higher or low. We're still always in long. I think we probably are, but I'd rather be buying with limit orders at the bottom, like 14 close, than buying with a stop above. So far, this looks like this: buy the close and eventually get back up to the high close. I think it was reasonable to buy the 10 close, reasonable to buy the 12 low. I did not do either, but because it's reasonable, we're probably going to get back up there at some point. We may need some kind of a micro double bottom here. For the bears, a low one short after that big bear bar, but you're selling at the bottom of the trading range. I'm currently flat. We're in the buy zone, but I still think if it's going to be a trend day, I think down is more likely than up, simply because we're at the top of a channel. You can call it a parabolic wedge, very tight channel, 60-minute chart. And we've had a lot of days up, 5 consecutive bull bars, which is a lot. And the weekly chart last week, I think, is going to be an exhaustion gap bar. And a lot of times when you get a big bar like that, the next week is small. And so far this week is small. Well, can you buy above 17, double bottom 7, micro double bottom 15, the opposite of what we had up here? Well, I would not be buying with stops. I certainly would not buy with a stop above 17. I still think if we're going to get a trend, it'll be down rather than up. But this is the wrong location for selling. If we go up and get a lower high, then maybe sell. At that point, it would be but right now we have a higher high, major trend reversal. That would be a lower high, major trend reversal. Head and shoulders top, left shoulder, head, right shoulder. It should get back up to around the 10 close because it was reasonable for bulls to buy that close. I don't know that we go straight up. We might have to go sideways more. Today looks a lot like this. So buy the close here, never got back up there. But it did get back up to these high closes and to these lows where bulls bought the low, betting that either there'd be buyers below and we would go up, or that we'd get a deep pullback in a trading range and we would come back up. Bears trying to get a low too short. It would be better if they get a bear bar, maybe on bar 19 or something, closing below the moving average. That would be a higher probability low too short. This is bar 18. Range, about a half of an average day's range. And therefore, if we break out below the low of the day or above the high of the day, we could go for a measured move. I think we're probably not going to, just because of all the reversals today, if we break below or break above, I think we're probably not going to go all that far up or down. It looks like it's going to be a trading range day. Bulls will sell around the 10 high, the 12 low. They bought there, they bought more lower. They're looking to sell up there. The bears know that, and the bears will sell up there also to where the bulls need the market to be. They bought the 10 close, they bought the 12 low, and they bought more 1 or 2 points lower or more above 14. And now they can get out break even on their first buy and with a scalp on their second buy. I think we're still always in long from the reversal up 8, 9, 10. We went to a new high and we're unable to get to a new low. Bears, this is the sell zone. The bears need to create a reversal again here, trying to create a lower high major trend reversal. I think most of the bulls will scalp. But past 2 days, we had early sell-offs in trading ranges and bull trend days. Early sell-offs, trading range, bull trend day. Early sell-offs, trading range, bull trend day. Bulls are trying to do the same again today. Today's selling is stronger than the prior 2 days. So I think the odds of a small pullback bull trend day are less. I think the odds of a trading range day are greater. Because of all the reversals, if we break above 13, breaking above the 18-bar range, we'll probably get a pullback before long. And therefore, a lot of traders, instead of buying on a stop above bar 13, the top of the 18-bar range, they'll wait to see if there's a strong breakout and buy the breakout, or they'll look to buy a pullback. Like yesterday, here's bar 18. This is the top of the range, not a strong breakout. So a lot of traders prefer to buy a pullback. The measured move up from the double bottom takes us almost to 2760, which is right around that measured move on the 60-minute chart based upon that gap. Can you sell the high betting on an expanding triangle or a wedge top? I would not. I would wait to see if we start to go sideways. At this point, a breakout above the 18-bar range, 90% chance we're not going to go to a new low. And that means 90% chance of either a trading range day or a bull trend day. If we get a bull trend day, I think the odds are against it being as strong as yesterday and the day before. We've had more. The selling today on the open was stronger than the past 2 days. Looks like we're getting vacuumed up to that gap. That gap is also on the daily chart from this low to that high. Traders are buying the market, buying closes, buying for any reason. Probably going to get there. Can you sell? 1 or 2 points above the 13 high? I would not. I need to see more selling pressure before looking to sell again. So I need to see the market go sideways for a few bars. A little bit of a parabolic wedge with 14 and 19, 2 legs up and now the third leg up. But big enough breakout, bulls will buy the first pullback. Can you sell the close similar to 10 and similar to buying the close 14? Context is different, right? This is a big breakout. Likely that we're going to get at least a small second leg up, so I would not sell the close. Suppose 23 closes on its low. 22 is the biggest bull bar, certainly in the past 50 bars. So a possible exhaustion gap instead of a measuring gap. And also possibly a parabolic wedge with 15 and then 18, 19, second leg, third leg. But strong enough breakout, context good enough, low probability short. to sell below 23. I think most bears would want 23 to close down at the 22 low and be a huge reversal, and that is not likely. Disappointment bar for buy the closed bulls, and therefore they have to make decisions, right? Some of them will place limit orders to get out break even if they bought the 22 close. Others will buy more, 1 or 2 points lower, and then try to get out around the 22 close. Buy the close rally, disappointment. With that bear bar, a lot of the bulls then place limit orders to get out break even. And you can see the high of this bar got to that high close and has a big tail. That tells you that the bulls were disappointed by these two bear bars and they would try to get out break even and created a micro double top and led to a swing down. So this is potentially a disappointment bar if it has a bear body. But strong enough breakout, odds are we're going at least a little higher. So I would not be selling yet. High one buy, but a bear bar. So similar to bar 12, high one buy, but a bear bar. What's different here is this breakout is so big that a lot of bears will wait to sell. They might not sell the 23 high. Bulls bought the 22 close and or 1 point lower. A lot of them will try to sell out at the 22 close, and therefore we can get a micro double top here. But strong enough breakout so that even if we sell off for 5 bars like yesterday, probably buyers below. So breakout above the 18 bar range, pull back for a few bars, bulls bought. Same the day before. Breakout above the 18 bar range, it sold off for 20 bars, yet the bulls still bought, betting that this breakout was strong enough so that we would not get below its low. If we sold off, we'd either be in a trading range or a bull trend. Extreme buying. So we're in the process of a blow off top on the 5-minute chart, probably the daily chart, but no top yet. Open of bar 24 above the close of bar 23. That tells you that as soon as 23 closed, traders just bought the market, so I'm very eager to buy. Extreme, right? Micro double top 22, 24, but still clearly always in long. Yesterday was a trading range day, trading range breakout upper range. Today is as well. Yesterday we did not pull back into the lower range. Right now at this moment, I think we probably will pull back below the 13 high before the day is over. Trending trading range day, trading range breakout that's brief, 3, 4, 5 bars, and then you start to form another range. I don't know that we're going to do that. I think that we probably will. Micro double top, arguably parabolic wedge, 3 buy climaxes, 1, and then 2, and then 3, and 4, or 1, 2, 3, but unlikely to get a immediate reversal down. The bears might be able to get an endless pullback in a tight trading range, but not much downside potential over the next several bars. Bulls bought the first reversal down after the huge 22. Fewer bulls will be willing to buy the second reversal down. A lot of them will wait for 2 or 3 legs down and then look to buy a high 2 near the moving average or a wedge near the moving average. limit order bears who sold the 23 high, 1 point higher, made money. So that's good for the bears, increases the chances of a trading range. Bull trend day at this point, but what kind? Is it going to be a strong bull trend like a spike pullback and then channel up all day? Or is it going to be a weaker bull trend day like a trending trading range day, trading range breakout, trading range? Right now I think probably more of a upper trading range. What are the chances that this is just a blow off top and this is a final flag, and therefore bears will sell below 25 if it's a bear bar? Some bears will take that chance. I think the probability is not high. I'd rather see 3 or 4 consecutive bear bars or a single very big bear bar before selling. Another high one like 23, but a doji bar. So not a great stop entry buy. And micro double top, failed breakout, not a very good stop entry sell. So it's probably more limit order trading with buyers below and possibly sellers above. But we're strongly bullish, and I think a lot of bears will wait until we get more bear bars before they sell, even though they did sell the 23 high and made money. Micro double top, buy climax, we might have to go sideways for 5 or 10 bars like this down to the moving average. Buy climax, here we went sideways for over an hour down to the moving average. Buy climax there. Market went sideways for 20 bars before the bulls came back. This is that 4-day channel on the 60-minute chart, but I can also draw a channel on the 5-minute chart. Micro double top at resistance, but strong rally and doji sell signal bar. Probably too early to sell. Probably minor reversal, even though it's a micro double top at resistance. 60% chance before the end of the day we're going to drop below the 13 high. But that percentage will change if we just keep going up. Right now, I think the odds are it's a trending trading range day where we have a lower range, a breakout, and then an upper range. So if we start to go sideways here, 10 bars, 20 bars, 60% chance we'll fall at least 1 tick below the 13 high. On the other hand, if we just pull back for a bar or two and then start trending up, and then, not 60%, maybe 20 or 30% chance if we start to trend up from here. Different ways to draw the channel, but no matter how you draw it, breakout, breakout, breakout. So we're breaking above a bull channel. And most breakouts above channels fail. When can you sell? I think you probably need 3 or 4 consecutive bear bars. I think it's a trending trading range day, so I think this is a minor reversal and that we're going to start to form a trading range. The bulls double bottom, but we might be entering a limit order market. Bears made money above 23. Limit order bulls probably will make money buying below 25. Can you buy with a stop above 27? Well, I don't know. If it has a big tail on top, I would not. I think it's okay to buy at the market, to buy below, betting that the reversal down is minor. But it's a climactic enough move, I think, to make it likely we're going to get a couple legs sideways to down and get closer to the moving average. So I think there's no rush to buy. Looks like a trending trading range day, so it looks like we're starting to form an upper range. The bulls are still hoping it's a spike and channel, bull trend day, so spike, pull back, and then channel way up. But I think it's more likely going to be a trending trading range day. This is strong enough so that the bears have a reasonable chance, maybe 40% chance of a big bull trend. I think 60% chance an upper trading range. Open of the day might not seem important at this point, but I think it is. Today so far is 6 consecutive bull trend days, but we're at a measured move target. And although you can't see the channel top on the daily chart, we're at the top of channels on the 60-minute chart and the 5-minute chart. That increases the chances of a reversal. And if we do dip back into the lower range, then the open of the day becomes important. If the day closes below the open, instead of a bull bar, we'll have a bear bar, similar to bar 33 yesterday. We had the breakout above the 18-bar range here and a pullback, and we got a micro double bottom, but not a very good looking buy. There was a better buy about 5 bars later. Here, a micro double bottom, 25, 28, and then 28 and 31. If you want, you can call it a wedge or a triangle. Still always in long. But it looks like we're in a tight range here. Stop entry above 30. I would not. If you're buying, it's a tight trading range. So if you're buying, it's a limit order market. You can see the bulls have bought 1 point below 25, got filled here. They had to fall 5 ticks, and a lot of them got out break even when it went back above the 25 low. So it looks like a limit order scalping market. Always in long, so easier to make money buying than selling. Still always in long. The bulls are hoping this double bottom is the start of a trend up, but we may have to get closer to the moving average. So not a very good buy. As for selling, you could argue a second entry short below 32, but the bottom of a tight range and probably support not far below. So if you're selling, it's probably better to be selling above bars with limit orders and scaling in. The market's deciding, is this a spike that will be followed by a channel, or is it a breakout that is going to be followed by a trading range? Is it going to be a spike and channel bull trend day, which is a stronger type of bull trend day, or is it a breakout and a trading range, which is a weaker type of bull trend day? We've had 5 consecutive decent bull trend days. And this one was not. This one was mostly sideways, but the others were mostly up. This one started like a trending trading range day, but got a bull breakout. Same with here. Usually a trend weakens as it gets older, and instead of like a spike and channel type of trend, if it's still going to be a trend, it might be a weaker trend, which would be a trending trading range day. In other words, a trading range after this breakout. How many bars do the bears need to make it always in short? They need to get more. Right now, probably buyers around the moving average. I've been saying that I thought we would pull back below the 13 high at some point today. We might be doing it here. I don't know. But to me, this looks more like a trending trading range day. It looks more like an upper trading range than a pullback in a spike in channel bull trend. And then later in the day, the open of the day becomes important. The bears want the day to close below the open and become a bear day on the daily chart. We've had 5 consecutive bull days, which is a lot. Here we had, what is that, 7 or 8? At some point you start to get a bear day. But when a trend is this strong, the bear day usually does not lead to a bear trend. It usually leads to sideways or higher prices. Same thing here. A lot of bull days finally get a bear day. Does not lead to a bear trend, leads to a trading range. We're in the buy zone. We're at the bottom of the trading range and at the moving average. Can you simply buy at the market, 1 tick above the moving average? I think we're still always in long. Some bulls will do that. You can see the open of 36 is 1 tick above the close of 35. So as soon as 35 closed, some traders hit buy the market. I think the market's deciding right now, is this a pullback or a reversal? Is this so extremely climactic that we're going to reverse, or is it strong enough up so that this is a pullback and we go higher? Probably neither one. Probably it's going to be a trading range. So instead of a reversal into a bear trend or a resumption of a bull trend, we're probably going to stay sideways. Limit order bulls buying 35 close, 31 low, moving average. Most bears do not want to short at the bottom of a tight range. They can be still holding for a swing short, but right now it's low probability. More likely we'll stay more sideways. Other bulls, a wedge bull flag. We have a double bottom 28-31 and a failed breakout, so that's 3 pushes down, even though the first 2 were double bottom. We also have a test of the moving average, and the bulls are trying to keep the gap open above 13. And this is probably an upper trading range. Do I think it's a great buy above 37? No. Because we have 5 bars down here in a fairly tight channel. A lot of times when you have 5 bars in one direction, the bulls want a double bottom before they'll buy. Also, it's better to be buying with limit orders than with stop orders. The bulls who bought the 31 low, they have their 5 ticks. So you have some bulls selling here. They buy this low and scalp out here. Can you sell here? Betting on a bear channel, lower highs, lower lows? I would not. It's a trading range, so you're selling near the top, and probably better only to scalp because it's not a very good looking major trend reversal. Possibly a final flag and buy climax, second entry short, but to me it looks like a low probability swing trade for the bears, and therefore bears who are selling are probably mostly scalping. Whenever I see a breakout and a pullback and trend resumption, I always think of a possible wedge, 1, 2, 3, but the top of that channel I think is too far. I still think it's more likely that this is a trading range instead of a spike in channel bull trend. So double bottom 28-36, you can call it a wedge or a triangle. And bulls are trying to get trend resumption up. Bears will try to get a double top 32 high. If we get 2 or 3 ticks above the 32 high, then the chance of a channel up increases. But the bulls need to get, I think, 2 or 3 ticks above the 32 high to make the double top bears give up. What about selling right here? 32 high and putting a stop 2 ticks above or 3 ticks above. Because if it goes 3 ticks above, it increases the chances that we're going to get a couple legs up. That's one of those, okay, if you did that, you would have lost, you would have been stopped out right here. But that, I was going to say that's one of those low risk trades, which automatically means low probability. So you sell at the 32 high or a tick higher and put a stop 3 ticks above the 32 high. You would have been stopped out right here. Chances are, whenever you risk 2 ticks or 3 ticks, you're going to lose money. And you're taking the trade knowing that you're going to lose money, but expecting that your reward is going to be big enough, greater, sufficiently greater than your risk to make the trade mathematically worthwhile. Bears want the failed breakout and the lower high major trend reversal. But by going 3 ticks above that 32 lower high, the odds are there are buyers below 40, and the bears will need a micro double top. Do I still think we're going to close the gap 13 high? I do. If we start to break, if we go up more strongly, then I'll change my mind. But as long as we stay in a trading range and do not have a new leg up, I think the odds are we'll go below the 13 high at some point today. This happens all the time. You get a breakout from a bull flag, and the breakout's not particularly strong. Traders wonder if it's a failed breakout in a reversal or if it's going to get a second leg up. I think the 3 bull bars, the body's getting bigger, 36, 37, 38, 39, makes the second leg up likely. I think going 3 ticks above 32 makes the second leg up likely. For the bears to change that, they need to reverse 38, 39. They need to get a pair of decent bear bars closing somewhere down here. Otherwise, it's more likely buyers down here for at least a little bit more up. I still think this is a trending trading range day and not a bull trend day. This is where the bulls have to prove themselves. They need to start channeling up. They need to start getting a series of higher highs and higher lows. If they don't start that in the next few bars, then this is going to remain a trading range, and we have a 60% chance of then falling below the 13 high, possibly getting down to the open of the day by the end of the day. So it's very important for the bulls to not let this reverse. Breakout, pullback, buy, always in long. I don't know that it's high enough probability for a scalp, but it's an okay swing, taking a chance that this is the start of a channel up. I think it's not. I think the probability is that it's not, but it's, the math is okay for the swing. Bears want a wedge higher high. So 1, 2, 3. And the bulls want a channel up. A lot of times when you get a wedge rally after a pullback, you get a double top. We saw that in the euro on the daily chart. Wedge rally and a double top with this high. And the bears are getting a reversal. Bulls need a breakout. They can get it with 1 or 2 big bars or with 4, 5, 6 small bars like this. They're hoping that instead of a wedge, major trend reversal, double top, major trend reversal, this is the start of a bull channel like we've had so many days this week. like this, pulls back for 2 or 3 bars, yet it just keeps channeling up like this. I still think the odds are against it because we've had increasing selling pressure on the open. It started here 2 days ago and then again yesterday and even more today. Tried to be a trending trading range day, but we got a bull breakout. Yesterday was a trending trading range day, but a big gap between the upper range and the lower range. Today, so far, is a trending trading range day with a small gap. And if the bears can keep it from getting much higher, then the odds are we'll pull back below the 13 high. So this is important what's going on here. Are we channeling up? Is this a spike pullback channel or is it a trading range? And we'll know over the next 2 or 3 bars. For the bears, you get a micro double top 40 and you have a lower high major trend reversal, but not a good sell signal bar 44. So I would only be short. I am not short, but if I were shorting, I'd be shorting at highs, 32 high, 1 point higher, high of the day, 1 point higher, or above 45. And I'm not willing to buy up here because the breakout is not strong enough. So I'm looking to sell. And if we break strongly to the upside, I'll buy. I do not think it'll happen. If we trade down here again, I might buy, but we're getting into that window. Let's say we trade down 5 or 6 bars, then all of a sudden it's 10:30, 10:45. You got to be thinking that we're going to go lower, below the 13 high. So I think it's a little bit tricky to buy. If we accelerate up, it's easier to buy. If we go sideways and form a double bottom 42 at the moving average, that might be a buy. But if we start to get 3 or 4 bear bars, then the odds are we're going below the 13 high, which I still think we are. I still think it's more likely an upper trading range in a trending trading range day than a channel up after a spike. Another breakout pullback buy, but not a particularly strong rally. It still could be like the past few days this week, over the past week, where we've had weak rallies that have just gone up all day. I don't know that the probability is high enough for a scalp. Earlier in the day, I said that there was a measured move up from this gap. If you use the bottom of the gap, the top of the rally, the measured move is here. Some computers are using the middle of the gap, which would put the target a couple points higher, but we're right there, very close. We got within a tick of it. The target is at 27.59.75, which is 1 tick above the high. Bears need a sell signal bar 48. They have a 5-tick failure and a nested wedge. They have a wedge 1, 2, 3 and a wedge 1, 2, 3. Very tight bull channel. Not a great short, probably minor reversal, even though it is a higher high major trend reversal. More likely the first leg down will be minor because this channel is tight. For the bulls, they're hoping spike pullback channel, and it would just keep trading higher all day. Whenever there's a higher high major trend reversal like this, but the leg up is in a tight channel, the reversal down is usually minor, and the bulls and the bears usually need some kind of a double top 10 or 20 bars later. So right now the downside risk is not very great, because the probability of just going straight down is small when the channel is tight like this. That's the short, higher high, major trend reversal, nested wedge, 1, 2, 3. Decent sell signal bar. The big problem that the bears have is this channel is tight. A 1 tick pullback, 1 tick pullback. and it's going on now for about 15 bars. Usually the first reversal down is minor, and the bears will need a double top. Another high one bull flag. This rally from 46 is a 5-tick trap. So I'm not sure that it's worth scalping longs up here. Small pullback bull trend, not a very high probability short. So bulls are swing trading, stop below 36. Bears, I think it's just not a good short with a stop below 49 or a limit order above 49. Selling above 49, small pullback bull trend. Pullbacks are small, so it makes it hard to make money. And selling below 49, small pullback bull trend. You're selling too low to make a scalp, and the channel is too tight for a swing. Probability is too low for a swing down without it going sideways more. Yeah, that gap in the breakout test, testing the one high. Bulls are hoping for a measured move up. It doesn't look that far, but we don't have much momentum, so I do not think we'll get there. Still a type of wedge, different ways to draw it. Nested within a bigger wedge, 124. The problem the bears have is the channel is very tight, and that makes it a low probability stop entry short. More likely will go sideways instead of down. And the bulls, the channel is tight, but we're not going up very far. And most bulls do not want to buy high up in a weak rally. They want to buy pullbacks. So what do you do if 55 closes on its low? If I were still long, and I'm not, I was long and flat. If I were long, I would get out below. And for the bears, because the pullbacks are so small, one tick here, one tick there, it's a low probability bet. And to scalp, you need a high probability bet. So it's really not good math to do anything. That's usually the situation when the range is very tight like this. It's very difficult to make money. I'm going to turn the screen off for a moment. Decent sell signal bars, but very tight channel, very small pullbacks. That makes a lot of traders not willing to sell below 56. Market's deciding that we're going down. This is a give up bar. The bulls who were hoping the channel would continue are giving up. We have a spike pullback channel, target 36 low. Similar to 5, the bears were able to get a big tail on the bottom of 5, and it was the low of the day. Here, spike, pullback channel, wedge, 1, 2, 3, nested wedge. Context is pretty good for the bears. will the bar close on its low? That would increase the probability that we're going down to the 36 low and one tick below the 13 high. If it has a 3 or 4 tick tail, it increases the chances that we'll go sideways. When you have a spike-like channel, the market often goes sideways about halfway down, but the odds still are that it'll get to the bottom of the channel. Only 2 tick tail. The bar is a decent bear bar, but not a huge bear bar. I suspect we're going to go sideways here. Just like after bar 5, we went sideways for several bars. But I also think it ruins the bull case of a continued channel, and it converts the channel into a trading range. And I think we'll probably get a second leg down. It's a small second leg down, so I would not buy. First reversal up. Bulls are trying to get a bull bar 59 for a failed breakout. Yesterday we had that bear trap that reversed up. Failed bear breakout, failed bear breakout, failed bear reversal. Always in short. Might bounce, but bears will sell the first rally, trying to get down to the 12 high. The bears would like to get all the way down to the open and turn the day into a doji day on the daily chart. But we have the support, 36 low, bottom of the channel. And the bars are not particularly big. Sell by close, but support just a little bit below. Five decent bear bars. So probably not like this, probably not going to reverse up strongly. Here we got 4 bear bars, went to a new high, but a much stronger bull trend. We do not have that today. Probably sellers above bars. And the bulls buy, betting on a higher low, 36. Failed breakout, hoping for a new high of the day. I would not. I think the context is good enough for a second leg down. So I think sellers at the 60 high and higher moving average, right? Stop for the bears way up here. So anyone selling here has to use the appropriate stop and trade the appropriate size. Low one short, 60, support just below. Can you buy the 60 low and 1 point lower? We just went always in short. And therefore the probability is not great for bulls buying unless they're using a wide stop and scaling in. I think the odds are we're going at least a little lower. And we have an important magnet, 13 high, and open of the day. I've been talking about them all day long, so not yet buy. Limit order bulls buying 60 low, 59 low. Stop order bulls, they might buy micro double bottom 61. I would not. I think if you're buying, it's better to be buying below bars because I think we're always in short. And I think there'll be sellers not far above, maybe around the moving average, maybe a 50% pullback. For the bears, double top bear flag, so low too short, magnets below 36 low, and more importantly 13 high, still 60% chance for going below the 13 high at some point today. Not a great stop entry sell, bull bar 60, bull bar 62, but we're always in short, and it's more likely that we're going down here than it is that we're going up here. You can see a lot of traders are trying to sell at the high of the prior bar, but the market's not letting them. There are too many traders with limit orders to sell at the high of the prior bar. So traders are being forced to sell at the market below the high or with stops below bull bars, which is not great. Buyers probably 36 low, 13 high, and open of the day. Even though we sold off 5 bars, there's not a lot of momentum. Also, even if we were to trade all the way down here, we probably would not get much further down because most reversal days do not trade far below the low. Usually they go up and they come down, and the best the bears can get is a test of that low. So not a lot of downside. But not a great short. Everyone wants to sell higher because we're in the support zone and the sell-off is not all that strong and the sell signal bars are not good. Similar to buying above 36, except here the market was always in long. Now it's always in short. We have a ledge and 80% chance we're going to go above the top of the ledge either today or in the next couple of days. Four more bars with exactly the same high. Usually when you break above a ledge, you pull back below the top of the ledge. You pull back, it could end up another leg down, but at a minimum, it'll pull back below the top of the ledge. Ledge bottom broke below it, as is likely, and is a pullback. Here the pullback led to a reversal up, so bear breakout, reversed up. Ledge up, went above it, pulled back below it, and in fact reversed down. Ledge bottom broke below it, pulled back above the bottom of the ledge. Strong sell-off, micro double bottom, big rally. Strong sell-off, micro double bottom. Bulls are hoping to get all the way up here, but probably lower high. I think we're always in short. 50% pullback. All right, so we're in the sell zone. The bulls are hoping that we get a strong reversal up like this and like this. And I think the odds are we'll get a lower high that we've seen the high of the day. Bears need some sign of a loss of momentum, like bear bars or big tails on top, and then they'll sell looking for a second leg down. Never good for the bears to see the bulls make profits with a stop. And the bulls have bought about 62. We rallied 6 ticks, so stop order bulls made money in a market that just became always in short. That weakens the bear case. Similar to this bull flag, bull breakout. I thought likely buyers below, second leg up. Here, the bulls are hoping it's a bull flag or a double bottom, high or low. And they're hoping that this is similar to this, but I think it's probably not. I think this is more bearish. We had stronger bears coming into this. Well, the bears, a breakout pullback short, but pretty good 64. Only one bear bar in the past 5 or 6 bars. So we may have to go sideways more, but I still think always in short. It looks like most bulls scalped. We went 6 ticks above 62 and pulled back. That's exactly what the bulls needed. Limit order bears who sold 1 point above 62 probably will make money, because when there's a ledge and you get a bull breakout, the market usually pulls back below the ledge top. With a small ledge like this, we'll probably pull back below the top today. Bigger ledges, bigger bars, bigger patterns. Sometimes the pullback is a day or two. Order bears made money selling 1 point above 63, which makes sense. Stop order bears, I still think we're always in short. And I still think the odds are we're going below the 13 high before the end of the day. But it's possible to go more sideways here before we go down. It's possible that we go up a little higher before we go down. Bulls want a reversal 64, and they want 67 to be a pullback from the reversal, similar to 39, 40, 41, 42. But I think we're always in short, and I think we have important magnets below. At the low of the day, we got a double bottom. We could not get down to yesterday's close support, a magnet. And I think the 13 high is an important magnet. But if the bulls get some kind of a double bottom again, then it's possible that we get back up to the high of the day and not down to the magnet. I still think we're going down. Probably sellers above. For the bulls, it's a pullback from the 64 breakout, but I think the 65 rally is a pullback from the bear reversal. Five ticks down from 69 high, so a lot of bears will scalp 1 point. They can hold. I still think we're going below the 13 high, but we're at the bottom of a range. And I think a lot of the traders are scalping, especially with this very tight range here. Bottom of the range, what about buying 36 low? Well, I think it's a trending trading range day, and we know that there's a 60% chance the market's going to get 1 tick below that 13 high. And therefore, buying the 36 low or the 61 low, I'm not sure that it's worth it. I don't think the math is good enough. You can certainly do it hoping that we get a swing up to the top of the upper range, the high of the day. But I think it's more likely that we're going to try to get down to the open and have the day end up with a bear body. I don't think we will get a bear body, but I think we're going below the 13 high. You can see a lot of the bears who held short knew the odds were we were going to fall at least 1 tick below the 13 high. And it looks like a lot of them bought back their shorts there. You can see the 73 open above 72 close. So you had some buy the close bulls who bought there as well, betting that the bears would take profits. Can you buy above 73? 2 legs down in a trading range, 1 pullback, 2. Possible second leg trap. Well, we still have the target of the open of the day. I'm not sure that we'll get there. We might. So that makes me not eager to buy above 73. Also, 72 is a pretty big bear bar. So more likely, big down, big up, big confusion and sideways. Big down, big up, sideways. Limit order bulls 36 made money. They bought the 36 low, 1 point higher. We're back above the 36 low. Limit order bulls 61 have not yet made money, but because this is a trading range, I think they probably will. The bears have achieved their one major goal. They dipped back below the top of the lower trading range. So there's less need for them to do any more. They've achieved the most important goal of the day. That's forcing bulls to buy very high up. Probable trading range. Therefore, not a high probability buy. Risk is big because the signal bar is big. So bad math for a stop entry bull, unless he's willing to buy looking for a new high. Trading ranges dipped below the top of the lower range. Lower range began the prior day. Could not dip back below the lower range. Same with here. Back to always in long. Bulls are hoping to close on the high of the day, but we've been sideways now for 4 hours. So the odds are against this just going straight up. More likely, like today, earlier, breakout, pullback, breakout, pullback, breakout, pullback, breakout, pullback, breakout, probably pullback. For the bears, double top, 65, but strong enough reversal, probably buyers below. Enough of a reversal so that we're probably not going to close in the lower range, so the downside is probably limited. This will probably remain the low for the rest of the day, but we'll probably stay in the upper range, all day long. Even with big breakouts like this, we ended up quickly going sideways. How many bears are going to sell below 74? Taking a chance that we got a double top, break below the neckline, and then close on the low of the day. We can do it, but it's low probability bet. More likely buyers below 74, even buyers below 75. Big reversals, end of the day. Big reversals, limit order market, but end of the day, not a good time for limit orders, especially selling above a bull bar of 73 or buying below a bear bar of 75. Like the open of the day, a lot of reversals here. So down and up, down and up, down. I would not sell closes here. You can call it a wedge, 1, 2, 3. But I think pretty difficult to do anything with it. We went 1 bar up, 1 bar down. Limit order bulls who bought the 72 low made money. Interesting finish. I think what's going on right now, the E-mini is really interesting. Last week, on the weekly chart, the biggest bull bar in more than 50 bars, probably an exhaustion bar. We had one here, and exhaustion does not mean bear trend. Exhaustion means the bulls are tired and they're going to wait to buy. They wait to see if the bears can get a reversal. If the bears cannot, then they buy again. You can see exhaustion bar, doji, sideways for 6 weeks, bull trend resumed. Exhaustion, possibly a doji by the time Friday closes. The bears will try to get a reversal, and the bulls will try to keep it sideways, and then they'll try to get trend resumption up. You've read my blogs, so you know just how unusual the daily, weekly, and monthly charts are right now. Monthly chart, when a monthly chart looks like this, not a lot of downside risk in terms of time or price. Time might sell off for a bar or two like this. Price, these sell-offs on the monthly chart were 15 to 20%. So it's possible we can get a huge sell-off down to the bottom of this buy climax down here. But even if we do, the odds are the first sell-off, bulls will buy it. So not a lot of downside risk. You get a surprise big sell-off. I think the first sell-off probably will be about 5%. But would I be surprised if we fell 10% or 20%? No. It's possible we fall all the way to the bottom of this series of bull bars. This is a buy climax. That's a target. The bears want to get down to the bottom of the buy climax, and then they want a measured move down, which takes us here. So about a 20% correction. And the bulls don't care. No matter, even if we fall 20%, they're still going to buy. The trend up is so strong. The first reversal down will be minor, and that means either a bull flag lasting a month or two like this, or a deeper sell-off leading to a trading range. In either case, they can buy up here, they can buy down here, not much risk. They know that even if it sells off, it'll come back up here. At some point, sometimes it might take 6 months, but it'll come back up there. Weekly chart. I'm going to be away for 3 days, tomorrow, Wednesday, Thursday, and Friday. So I'm not going to be trading. But it'll be interesting to see if this week is either a bear reversal bar or simply a doji bar. This breakout, because it's not very big, there's less chance of a blow off top. Sometimes if the first bar is not big enough, you have to get a second big bull bar. And then if you get two, you have a better chance of a blow off top. Here, the market needed 2 bars and even got a second leg up before we get a pullback to the bottom of the buy climax. This is where we are on the weekly chart. I think we're going down below the low of the week. Here, it took 20 bars to get there. 20 bars on the weekly chart, that's half a year. 2 strong bars, we got a little bit more up, and then came down to the bottom of the buy climax. Here, strong bar, 1 small leg up, came down below the bottom of the buy climax. Here, a single bar, the bear's got a micro double top, and then a reversal down below the buy climax. Daily chart, all the way back to the open of the day. Normally that would not be a sell signal because 6 bars up, a very tight bull micro channel. The only reason it would be a credible sell signal now is because the daily, weekly, and monthly charts are so extremely overbought. Even then, the bears will probably need at least a micro double top. And that means if we sell off, bulls will probably buy the sell off within a day and a half. A lot of times when you have a strong trend, the sell-off lasts about a day, day and a half, like this 1 day. And so a lot of times you get a bear day, and the next day it sells off for half the day, and then it reverses up. 60-minute chart, top of a channel, measured move based upon that gap. You can view this as a spike in channel or a parabolic wedge, a bull breakout above a very tight channel. But this is so extremely climactic that we should start to pull back soon, maybe down here. We might need some kind of a micro double top, might go sideways first, but this is really unusual. That's a lot of points in a very tight bull channel. Extreme behavior. Stops are far away. The bulls were going to be relatively quick to take profits if the market is starting to turn down. I thought the past week was interesting. We had a couple days trend from the open bull trend. Very good bull bars right from the open. And then here, we had a couple of bear bars that still turned into a bull trend day, but early bear bars. And then here, early bear bars again yesterday. Still got a bull trend, but not particularly strong. Today, even more prominent bear bars, 2 strong legs down. Still got a bull trend, but we ended up getting a reversal day. Excuse me. Stop entries today. Bar 2, possible high of the day, but because it had a 2-tick tail and only a 1-tick body or 2-tick body, I thought it was not going to be the high of the day. I thought we probably were going to go sideways. Bar 5, huge bear breakout, but big tail. And limit order bears who bought, limit order bulls who bought the one low ended up making money over here. So that's bad for the bear case. And we have big up, gap up, big down, big up, big down. Trading range, double top, double bottom. And the bulls got their breakout above the 18 bar range. Bar 18 was here. Here's the top of the range. And they got about a measured move up. Spike, pullback channel, very weak channel. And then we got the reversal. The market was always in short on 58. Bulls tried to get the reversal up 73, but failed. And we got a double top, 65, 75. And we sold off back to the open of the day. And the result is a doji bar on the daily chart. Stop entries, below 1, I would not. Below 6, obviously not. Above 8 makes sense. It's a double bottom, 1 and 5. I know they're not the same price, but you can think of it as a double bottom. We went up, we're trying to go up again. And a micro double bottom. If you prefer, you can think of it as a wedge, up, up, up. 8 closing near its high. Possible opening reversal up, but with 7 bars down, 6 bars down, probably a minor reversal, which means the best the bulls yet is a trading range. Good bull bar 10, probably always in long, and then the bears got higher high, major trend reversal. 13, one tick above the high of the day, micro double top, bear bar closing near its low. Okay, swing short, but probably buyers below. The sell-off 17 could not get below the 7 low. We have a micro double bottom. Not a great looking buy, but we're near bar 18 and we're trying to reverse up. So some bulls will buy above 17, others will buy above a bull bar 18, and then we get a strong breakout 22. Buying above 23, well, I think we're going higher. I think we're not going a lot higher. I think we're probably going to go sideways. And this could be a trending trading range day. I would, it's a spike pullback channel. It's a spike in channel bull trend day, but it's also a trading range day. The channel evolved into a trading range, and then we dipped back below the top of the lower range. So it's a fairly typical spike in channel bull trend day transitioning into a trading range, and then the trading range was the upper trading range in a trending trading range day. Stop entries up here, above 28, above 23, not good, above 36, not good, 37, better, but I thought we were going to be in an upper trading range, which means that the profit potential is not all that great. It did go up a lot of bars. Below 40, I thought 38, 39, the bodies are getting bigger, 36, 37, 38, 39. I thought there'd be buyers below 40 and we'd get at least a little bit more up. And then selling up here, below 49, I would not. Below 55, I think you can do it for a swing, but I think with this channel as tight as it is, we're probably not going to go straight down. We went further down initially than I thought we would. 58. I thought 58 made it always in short, so I thought we'd go lower. And we got a low 2 with 65. That remained a high for the remainder of the day, but 64 was good enough to make me think we were going to go sideways. And then double top 65. 70, not a good sell signal, or 70 or 71. The bears got 1 bar down to the most important target, the top of the lower range. Strong reversal up, 2 legs down, second leg trap, testing support, but I think we're probably going to go sideways rather than up. And then we have a double top, 65, 75, decent bear bar. I thought there'd be buyers below after 73, 74, but so I would not sell for a scalp, but swing bears got all the way down to the open. Buy the close, sell the close. On the open, it's very common. Most days have strong, at least one strong leg up or down, but no matter how strong a leg is, 50% chance any strong leg on the open is going to reverse. So 1 strongly up, 5 strongly down, 10 up, 14 down, and then 22 I thought was a big enough breakout so that we would get at least a second leg up, maybe a measured move up, which we did. Buy the close, sell the close. I thought we were always in long on 10, but we were at the top of the range, so not a good buy. And 14, when it happened, I said it might be more bulls buying the 14 close than bears selling the close. So not good, sell the close. And then we started to reverse up on 18, 19, probably buy the close 19, or you can simply wait for 22. Not much left to the upside. 58, I thought it was a surprise bar. Sell the close, but probably will go sideways before we get down to the 36 low and the 13 high. And then here, it's again opposite trading. You want to sell the 72 low. If you do, you stop as above 65. And it'd be very difficult to hold short after 73 reverse up. So not very good buy or sell the close finish here. Limit orders, probably buyers below 6 after that big tail on 5. Might be sellers above 7, I don't know, but 8 closing on its high, I'm not going to sell. Might be sellers above 12, a weak looking buy signal bar at the top of a trading range. And 16, I thought there'd be buyers below the bottom of the trading range. Up here, buyers below 24, probably below 29. I would not buy below 32. The bears have a lower high major trend reversal, probably a minor reversal in the trading range. 40, I said probably buyers below after the 39 breakout. 44 buyers below. And then up here, probably sellers above bars, above 52, above 49. Down here, probably buyers below 60, sellers above 60. And then through here, limit order trading. I thought we were still always in short, so I'd rather be looking to sell like the 61 high or the 69 high for a scalp. And then here, you can't sell 73, you can't buy 74, 75 low. So not good limit order trading there. I also traded stocks today, bond futures and currencies. From always in perspective, always in long on the open and the close of bar 1, but I get out below 2 or below 3. Always in short, probably on 5, but that big tail is a problem. And if we get back above that 1 low, then limit order bulls will have made money, and it'll be certainly much less bearish. And then back to long on 10. But if you're buying at the top of a potential range. We've had multiple reversals. So your stop is below 7, and the bulls were able to protect their stop. They prevented 17 from falling below the 7 low. So for me, I would not buy here. You could sell here. You could buy here. I think neither one is all that good. You could sell below 13, but I think we're always in long. So I thought we went always in long on the 9 close. You could buy above 9 or buy the 10 close or wait for the reversal up here. 19 close, the 21 breakout, the 22 close. I would get out of longs probably below 32. And if you're trading always in, you have to buy again above a bull bar since it's still always in long. So you buy again above 37. And I would get out below 56. Aggressive bears would sell below 56. Other bears would wait and sell the 58 or 59 close or 61 high. And I would get out of shorts above 75, 73. And too late in the day for me to be selling below 75 with reversals like this, even though it's sold off at the end of the day. What makes a good stop entry? Well, the most important thing on any trade, more important than the appearance of any candle bar, is the context. Does it make sense? So in other words, you can ignore the candle bars and just look at a bar chart, and a lot of times you can see things that make sense. You can see probabilities. Do you think this is going to be a major top? I don't think so, but this is a reasonable bottom, so bulls will buy above here. Here's a double bottom, they'll buy above here. Strong enough sell-off, bears will sell a double top, like below here. So context is more important than signal bar, but signal bar can be very important. For example, if you're buying high twos and a bull trend, it's nicer to have a bull bar like 37. High 1, high 2, decent bull bar above the moving average. High 1, high 2, decent bull bar. And if you're trading reversals, we haven't had a lot of really good reversals this week because we've been just going straight up. If you're trading reversals, I usually like to buy above a decent bull bar closing on its high. Tight bear channel, but a high 4 consecutive bottoms. I'd rather buy a double bottom like this bar and above a bull bar here, here, or above here, for example. Those would all be reasonable stop entry buys. Bear trend, double top at the moving average bear bar, reasonable stop entry sell. Question about AGG, a bond ETF. I have to say I've never traded it. I was thinking about talking a little bit about bonds today. A lot of this bond ETF is very similar to the 30-year bond futures, which is this. Okay. I'll talk about the 30-year bond futures instead of the AGG or the TBT or the TLT. I talk about it every now and then. I haven't talked about it in a while. Monthly bond futures chart. Wedge 1, 2, 3. Nested in a wedge 1, 2, 3. Nested in a wedge 1, 2, 3. Huge nested wedge. Very strong reversal. We're probably going down. You can call it a head and shoulder stop. Left shoulder, head, right shoulder. We're probably going down for the remainder of your trading career, right? We've seen the high, possibly for the rest of your life. And certainly for the remainder of my trading career, I would say 70% chance this is going to remain the high and that we've begun a trend down that'll last 20 years. And trends in bonds last about 20 or 30 years. This rally began in the 1987 time of the crash or so, about 30 years ago. And I don't think the bond futures chart goes back that far. But I remember when I started trading in 87, I think the bond future even reached in the 60s. And here we are, 160. I believe that we've seen the low in interest rates for the next 20 years. Interest rates are going up for the next 20 years, but they're not going to go straight up. It took 30 years to get up here. It'll take, 20 years to get back down to 80 or 95 or something. So for the next 20 years, we'll be going somewhere down, certainly below 100. That's an obvious big round number magnet. Spike pullback channel, spike pullback channel. Major higher lows are all targets here, 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 here. This took 7 or 8 years to get from here to here. It could easily take 5 to 10 years to get back down there. So the result is if bond prices are falling, interest rates are going up. And they'll probably be going up for a long, long time. The speed of the increase, nobody knows, right? My guess is the Fed will surprise everybody at some point in the next 1, 2, or 3 years by raising rates faster than what people thought was reasonable. And that will cause problems in the stock market. It'll cause sell-offs in the stock market. But a monthly chart of bonds, a lower high, major trend reversal. We may go sideways more because this channel is tight, but we're going down. 70% chance we're going down. Weekly chart, tight trading range, about a lower high, head and shoulder stop, left shoulder, head, right shoulder. We rallied for about a year until we break strongly to the downside. It's more likely that this will continue, but the bears are trying. You can see on the daily chart, very strong sell-off, 50% pullback, and now we're breaking again to the downside. the bulls have to buy this. They're looking for a wedge bull flag, 1, 2, 3, and an immediate reversal. And the bears want to break below major higher lows, like here, the neckline of the head and shoulder stop, left shoulder, head, right shoulder, neckline. They want to get below it. If they do, 40% chance of a swing down. However, on the monthly chart, 70% chance that we've begun a swing down that's going to last, 10, 20, 30 years. So I'm bearish. I think interest rates are going up. Good question. I bought 4 ticks below 13, stop below 8. Looking for a higher low off the moving average. Also, I bought above 15 for 2 points. Bought above 15 for 2 points. And with a stop below the buy signal bar. And both times those stopped out. My premise ended up being true. Can you comment on this? Yeah, I think I said that this looked like a big down, big up type of open and a trading range. And I said, if a trader is buying high in the range, they're betting that the market's either going to go sideways or up. And if it goes down, it'll stay in a range. But a lot of times the market goes below the low of a trading range. So had I bought below 13, first of all, I would not buy below 13. You got a double top here, a lot of bear bars, so I would not buy the 13 low. But had I bought it below 13, I would have probably put my stop below 7. And if I got stopped out, I would buy again on a reversal up, like above 18. Buying above 15, I would not have done that either, because 14 is a surprise bar. And whenever you look at the chart and you say, I wasn't expecting that, I would not quickly do the opposite, because whenever there's a surprise, there's a 60% chance there's going to be a second leg down. So when you look at 14 and say, wow, I thought the market was going to go up. I was not expecting 14, right? Looks like we're trying to get an opening reversal up, right? But then when you see 14, you say, wait a minute, that shouldn't happen, right? As soon as you say that, the odds are we're going to get 2 legs sideways to down. And therefore, I would not buy above 15. I would wait for a micro double bottom and buy maybe above 18. So my thought is, first, I would not buy below 13. I said on the open today that today could be a bear trend day because the market is so overbought, plus we're at the top of a channel. I would not sell the 13 low because this reversal up was a surprise, but I would not buy the 13 low either because we have a possible double top. And I said several times today that until the market is clearly trending, 50% chance, no matter how strong a bull bar is or a series of bull bars are, you're going to get a reversal. We reversed after this, reversed up after this, and at this point, it's still 50% chance we're going to reverse down. So if you're buying here, yes, the market's always in long, which means trading range or bull trend. Trading range means it could go down to the 7 low and still be in a trading range. So I would not buy there. Had I bought here, I'd put my stop down here, and I would get out probably before my stop was hit. I probably would get out during 14 or on the 14 close, and I would not buy above 15. I would wait for a second entry buy. But I understand it's really easy to look at momentum. Just look at one bar. Oh, we're going up. Bar 10. The bears had their chance. We're going up. Well, we haven't broken strongly above the top of the day yet, and we don't have a breakout and follow-through bar. This is breakout. Bad follow-through, so probably a trading range, but that's a breakout, and it's a surprise bar. The opposite of 14, probably going to be a second leg up. So I would not be selling. I would only be buying, looking for at least a small second leg up. Multiple reversals, early trading range. I don't want to be buying high until after I see a strong breakout, and then I'll buy high. And if I do find myself long, let's say I buy 10 and did not get out below 13, I'm going to put a stop below 7. And if I get stopped out and I still think we're going up, double bottom, I'll buy more on the reversal back up holding for a swing. Okay, hope everybody has a good remainder of the week. Monday is a holiday. I often take a quick vacation during this time because I got the Monday holiday. So I end up missing 3 days. But I hope everybody trades well. I think what we have going on is just fascinating. The market has never in its history been this overbought on the daily chart, on the weekly chart, on the monthly chart. And it continues to get more overbought. And I think we're putting in a blow off top on the weekly chart. And I think we're going to go below the low of this bar and possibly a measured move down. And on the monthly chart, this series of 5 bars might be a blow off top, which means we might come all the way down here and possibly go to a measured move down all the way down here. Not likely, but it's going to be interesting to see how this plays out. The market has never been this extreme, never. And because it's so extreme, there's an increased risk of a much bigger and faster reversal than you would otherwise expect in a strong bull trend. All right, hope everybody has a good remainder of the week.